Hey, what's going on, everybody? It is Friday, September 29th, end of the quarter, end of the week, end of the month, business-wise, and end of the fiscal year. Yes, we're going to have a government shutdown. That's going to happen. As far as I can see, there's only a few more hours left for them to come to some sort of an agreement. I don't see that happening. And I'm going to talk about that in a second. So last week I said we were going to have an up week. This week we kind of sort of had that. I mean, we definitely had a rally off of the lows this week. NASDAQ closed about unchanged on the week. S&P was down a little bit and the Dow was down. Today was a fun day to watch, I have to be honest. It was another one of those days that was, I got a kick out of it because once again, we saw the monetarist zombies get triggered early this morning when one of their favorite indicators, I guess, or supposedly the favorite indicator of the Fed, which is the PCE price deflator, that came in lower than expectations. So what do you think happened? The zombies jumped right in there and they started buying stocks, and that was right at the opening, and we were up really strong. And of course, you know, they all jumped in there like a bunch of sheep buying at the opening, and that was the top of today, and we went straight down from there. And then, you know, if you want to go back and think about last week, they were the same, group. The monetarist zombies were selling at the bottom when we had all this very bearish and worrisome interest rate reports coming out, and so you could see their behavior. I mean, it's really a fascinating thing to watch. I've been all over this in my last few videos, even talking about how you don't really need to understand economics. I mean, it's a huge help if you do, especially if you understand it in the context of the type of information or education that I'm giving you with regard to the fiscal flows and how that's the first derivative of everything. But even if you don't know that, just going by pure observation of behavior and emotion, I mean, you could see these turns. They're so classic. They're unbelievable. I mean, today, this morning, you get a number, they all look at the same number, they all jump in and do the same exact thing, and boom, that's the end of that move. And last week, they all get freaked out about interest rates and headlines about the Fed being, still very hawkish, and so they sell, and that was the end of that move. Then the market goes up. So it's really I find it to be very, very amusing. Today, actually, I sent out an email. I guess it was around somewhere midday. We had traded down, and I believe that the S&P, it got down to like 4274 or 4275, if I'm not mistaken. And I sent out an email right about that level saying, okay, now you got to buy it. If you're trading it short term, you got to buy it back because it's going to go back up. And sure enough, it did. How did I know that? I knew that because the 42, I believe it was like 4276, was the low, the intraday low on Wednesday. And for me, I know where they're going to put their stop losses. They put it right below a price point or right above a price point. I've said in the past, folks, that prices are irrelevant. It's really all about the macro picture. It's about basic conditions. It's about understanding or knowing what the current economic environment is, and from that you can become very precise in, even if you're attempting to do short-term trading. Like you could, if you know, for example, that like right now I've been telling you that up until October 15th we should be in a positive environment because flows are recovering now. By the way, we're only like something like 30 billion to recover from the September 15 tax drain, but that was, that's going to be wiped out. It was probably wiped out today or Monday with the first of the month payment flows. So if you know that, then you know where they're going to put their stops. and you want to be in a positioned in a bullish way. And so the obvious thing that all these zombies do and all these very inexperienced and novice traders do, they put their stops below some price point or above some price point. I'll give you a little background on myself. For those of you who don't know, I was a former member and floor trader on 4 different futures exchanges. I traded in Chicago in the S&P pit, and in New York in 3 exchanges on the NYMEX and the COMEX and the New York Futures Exchange. But that's something we used to do as traders. We used to try to push the price up or push it down to levels where we know there would be stops, and get those stops elected, and then we would just go the other way as soon as those stops were hit. I mean, that was a game we used to play all the time. And the way we knew that was we got to know the brokers in the pit who were executing orders on behalf of, big customers like Goldman or JP Morgan or Merrill Lynch or whatever. And they tell us what was, on their deck. And then so we know. But you didn't even have to become friendly with them. You would know just from looking at charts, because that's what a lot of people do. They just place their stops at obvious points on a chart. And so we'd run those stops, we'd get them hit, and then we'd go the other way. And that was like a cash machine. So I don't advise doing that necessarily, but if you know what the macro picture is like I've been telling you guys, like, from now to October 15th, expect a bounce. And I've also been telling you guys that, the overarching big picture is still bullish. I mean, we're doing 550, 560, 570 billion of leading monthly spending flows. I mean, that's enormous. That's enormous. Now, let me say something about the shutdown, because I also said, I believe I said, but I know I sent it out to my subscribers, that we're going to get, if we get a shutdown, you're going to get a pullback in the market, once again, based on one of these emotional reactions to a headline. There's the shutdown. Hey, we better sell. And the selling is really based, it's not like these people know that the flows are going to come down. And we don't even know if they're going to come down. I told you yesterday that I went and I looked back at my data from 2008, the shutdown that we had in 2018 to 2019, 34 days. And there was hardly any variance in the daily fiscal flows. So I said, I'm going by that model. And so I said, expect to see some kind of selling in reaction to the announcement of a government shutdown. But I said, you got to go against that. Because I didn't see in the data, at least from that last shutdown, 34 days is pretty long. I didn't see much variance at all in the daily flows. And the point I'm making is, like, these people don't know, they don't do what I do, which is literally look at these numbers every single day. They're just doing this once again on an emotional reaction, on a headline, because it's their belief in their head, or it's been pumped into them by the media that, this is going to have a negative economic impact. They don't know the numbers. They haven't spent 1 second trying to determine what the numbers are going to be. I'm telling you this right now. So once again, I think this was a very easy setup. We'll see. I mean, I could be wrong on this. Maybe the flows are really going to contract sharply, but I don't think so, because again, I'm going back. I went back. I looked at what happened in 2018. That was December 22nd, 2018 until January 24th, 2019. That was the shutdown. And hardly any change in the flows whatsoever. I mean, I was surprised too when I went back and looked at it. But I have all this data in a database, and so I'm able to go back and check. So, I mean, yeah, it's fun to watch these people. It's kind of like, it's kind of like a suicide by 1,000 little cuts. The interesting thing is there's always many more of them who come into the picture because you say, well, wouldn't they, don't they freaking learn after a while, getting chopped up so bad? I think a lot of them leave the game. They just don't make any money. They blow out. But then there's always more to come in and take their place, which is the fascinating thing. And again, this is human behavior. And it's counterproductive to what they're trying to achieve. They go with their emotion every single time. They think by seeing a headline that gives them some kind of advantage over some other market participant. It doesn't. It absolutely doesn't. So let the game continue as far as I'm concerned. Anyway, it's Friday. I'm going to go relax and enjoy. I got a boxing lesson coming up in about an hour and a half, so I got to get ready for that. And let me just do a shout out to my friends in New York City. If you see what's going on in New York and that whole region with this massive amounts of rain they've been getting, if you're there, man, I'm glad I'm not there, but if you're there, just try to stay safe. I mean, I've seen some unbelievable footage from New York City today with just total flooding of the subways, of buses, of neighborhoods, cars underwater. I saw one video of a city bus like with water that came into the bus almost up to people's knees. Like, it was really, really unbelievable. So a total washout on the East Coast there of around New York. And I'm happy I'm not there. I've never seen anything like that before. Even with Hurricane Sandy, which I experienced, I mean, it wasn't like that. It wasn't like that. So crazy stuff, everybody. Stay safe. Have a good weekend. Bye-bye.